Singapore iron ore prices surge as China steel revival hopes rise, Market Analysis 2024. Imagine a bustling steel plant in China, where workers are pouring molten iron into molds, signaling a potential comeback for the steel industry. This scene is becoming more common as Singapore's iron ore future prices jumped on Tuesday, fueled by growing optimism that China's steel demand is on the rise again. After months of uncertainty, especially with the recent end of China's annual parliament meetings, known as the Two Sessions, there's a buzz that steelmakers in the northern regions of China may soon ramp up production. This could mean brighter days ahead for iron ore, a key ingredient in steelmaking. But it's not all smooth sailing. The optimism is tempered by global trade tensions, particularly fears over new tariffs pushed into the spotlight by U.S. President Donald Trump, causing some investors to hold back. Despite that, the benchmark April iron ore on Singapore's exchange edged up 0.86%, hitting $100.75 a ton after briefly dipping to its lowest since January 14 at $98.85. Meanwhile, in China's Dalian market, the most traded May contract held steady around 774.5 yuan, roughly $107 a ton. Analysts from Chaos Ternary Futures pointed out that March could see even more demand for hot metal, which is a good indicator of iron ore needs. This comes as China's legislative meetings wrapped up, leaving room for hope that new stimulus measures might boost the economy and, by extension, steel and iron ore demand. However, prices for other steelmaking materials, like coking coal and coke, fell Monday, with drops of 1.67% and 1.28% respectively, influenced by weaker macroeconomic signals and concerns over future tariffs. The broader steel market reflected this mood. Rebar, hot-rolled coil, and wire rod all saw declines on the Shanghai Futures Exchange, although stainless steel bucked the trend with a slight increase. All in all, the coming weeks might prove pivotal in determining whether the recovery in iron ore prices is sustainable, driven by a potentially rekindled demand from China's steel factories amid a tricky global trade environment.